Peace, peace, family. Thank you guys for tuning in. Today, we're going to be starting week one of the bootcamp session. We're going to be covering the Ethereum network. Now, the Ethereum network is the godfather of decentralized finance. It is how decentralized finance became a thing, how DeFi became a word. So, without the application of smart contracts, we wouldn't be able to do all of the things that we're able to do and what we're getting ready to cover. So you have Ethereum to thank for that. So without further ado, let's go ahead and get it started. So the very first thing that I would like to focus on is Instadap. Instadap allows you to use these different networks. There are the Ethereum mainnet, Polygon, Base Network, Arbitrum, Avalanche, and Optimism. So we're going to be covering just today, just the Ethereum mainnet. Now, for those that are familiar or did come to the webinar, we covered how to use Instadap, but I'm going to cover how to use Instadap just really briefly, and then I'm going to get on with the lesson. So on Instadap, you'll be able to deposit cryptocurrency and then borrow against that cryptocurrency. And you're going to be doing that on the Ethereum mainnet. So you're going to be paying gas fees to do transactions on this particular platform. You will need a MetaMask wallet, and you can download that MetaMask wallet on metamask.io, and you will need to save those seed phrases once you download that MetaMask wallet. Now, coming over to Instadap, you have these collateral factors for deposits and borrows. So the collateral factor is just the percentage of what you can actually borrow from yourself. The max factor on some of these are really good interest rates. Well, not even interest rates, but the ability to borrow from oneself. So with Ethereum, you can borrow up to 80%. With DAI or a stablecoin, you'll be able to borrow up to 77%. With USDC, you'll be able to borrow up to 77%. Chainlink, 53%. Wrap Bitcoin, 73%. Aave, 66%. Staked Ethereum is 78%. CB ETH, I'm not exactly sure what CB ETH is. We're going to take a look at that. But that one has a 74% collateral factor. RETH, I'm not exactly sure what that one is. We're going to take a look at that as well. USDT is 74%. LUSD is 77%. Curve is 35%. Uniswap is 65%. LDO or Lido is 40%. SDAI is 77%. SNX is 49%. Balancer is 57%. Frax is 70%. 1inch is 57%. And ENS is 39%. So most people understand from a very basic perspective that these are the interest rates that allow you to borrow from your assets, and then only up to a certain percentage, if that makes sense. I want to keep this as clear as possible. So what you're going to do is, on this particular platform, you're going to have to do two things. One, you need to understand which direction the asset is going, as far as being able to tell how to maneuver with the asset. So if the asset is going up in price, you want to keep your collateral in check and make sure that your collateral is in the asset that's moving up and down in price. And if the asset is moving down in price, you want to make sure that your debt is in the fluctuating asset. So they talked about a number of assets on that platform. Let's bring those back up. So let's take a look at curve price for a second. Remove all of those drawings. Now, this is curve's overall price. So what you want to do is you want to be able to spot support and resistance on price. That's all you're going to be doing. You're going to be spotting support and spotting resistance. So right now, let's open this up. There's a resistance there. And support is about here. All you need to know is which way is the asset moving. If the asset is moving outside of this price range, this area being resistance, let me change that color. Change that to red. Make the support green. As long as price is moving on a daily time frame inside of this price range, then you can hold your collateral in this asset. Once the asset starts to break out of and start trading below this green line, you're now going to turn your debt into this particular asset. Let me show you what that looks like. So you're going to do a collateral swap, and you will turn your collateral from, okay, I didn't deposit any tokens. All right, let's go ahead and deposit. They're going to give me 2%, 2.01% to supply these Ethereum tokens. And right now we're in demo mode. Let me refresh the screen. Let's get those tokens deposited. Still in simulation mode. Waiting on Instadept to upload. There we go. Perfect. Let's go ahead and deposit tokens. Deposit not found. Let's see if I lower the deposit value. Let's see if I just supply 10 tokens. It's still not allowing me to do this transaction. Why is it not allowing me to do the transaction? That's interesting. Deposit not found. Connector interface. Must be having something wrong with their interface right now. But I'm gonna go ahead and I'm gonna move forward. So, like I said, the main thing that you want to focus on is collateral factors and your debt. So you have to be able to read price action in order to understand when you're depositing certain cryptocurrencies. If you don't know how to read price action, you will find yourself on the opposite end of this and you will lose value. So you don't want to take large losses when dealing with the system. So you definitely need to understand which way support is going and which way resistance is going. So as long as you understand price action, you'll be able to further assist not only yourself, but your family members as well when it comes to operating with this system. So we talked about the collateral factors. We already discussed how InstaDebt works. We already talked about how the debt system works as well. If you have not, I would highly suggest going to watch the webinar. And the webinar will explain in detail how to use this InstaDebt platform. So I really don't want to focus on the same things that I already went over. I just want to go over this just to give the new people who might be seeing this a chance to actually see how to interact with this with the Ethereum platform. So the next thing that I want to do is I want to go take a look at some other platforms on the Ethereum blockchain. And the best way to do that is through a platform called DeFi Llama. All right, so we got all of these different chains, but we're going to take a look at the Ethereum chain. Let me make sure everything on Ethereum pulls up. We're going to take a look at every single, well, not every single, but for the most part, where the money is flowing to, where the money is flowing out of on the Ethereum blockchain. That's what we intend to cover today. So right now, the largest holder on DeFi when it comes to the Ethereum blockchain is Lido Finance. They currently have a total value locked of $14.58 billion. The second platform, that is MakerDAO, and they have $4.47 billion. The third platform is Aave, and they have $4.17 billion. And the last platform, I definitely have to mention this one, is Uniswap, and they have $2.83 billion locked in on their platform. And definitely got to mention InstaDebt because that's the platform that we're utilizing for our services. So right now, they currently have $1.89 billion locked in value. So what I want to show you guys is how this works. When you come over to DeFi Llama, you're going to see where the money is flowing into for the past 24 hours, for the past 7 days, for the past 1 month. And you can use that as a catalyst to decide which platform would you like to go through in order to either deposit funds, withdraw funds, or utilize whatever system they have in place to accumulate value. So in the past 24 hours on Lido Finance, there's been a 0.53% change. In the past 7 days, there's been a 2.06% change. In the past 1 month, there has been a 3.73% change on this platform. So that right there to me is very positive for Lido Finance, especially for being the last 7 days and the last 1 month. Now on MakerDAO, they've lost 11.44% of their capital on their platform. So the fees are not being generated enough because there isn't enough capital on that platform to generate those fees. So they need more capital and they're losing capital right now. So what I'm going to do is I'm going to actually remove any capital that I might have on MakerDAO and I might move it over to Lido Finance. Aave has also been seeing an uptick in value over the past month as far as total value locked in. They're seeing a 6.84% increase in the past month and a 2.23% increase in the past 7 days. So that's definitely, I would be moving the money from this platform to this platform. It's as simple as that. You don't need permission. You don't have to ask anyone how to utilize the platform. So let's go ahead and take a look at Lido Finance. And this is everything you need to know about the platform. This is the incentives for the curves pool. They had a UST DPEG. They had the FTX collapse. They had a ETH withdrawal activation. So they allowed people to withdraw their Ethereum from their platform. And most people have not withdrawn. They've just added to this particular platform. So current value locked is $14.64 billion locked in. They have a market cap of 1.43 billion. The Lido price is $1.61. The fully diluted valuation of this asset, which is LDO, is 1.60 billion dollars. 24-hour LDO volume has been 36.88 million. The LDO liquidity is 26.6 million. The fees annualized, which means that the staking rewards earned by all staked Ethereum. Now, this data has been calculated from the last 30 days. So, multiplying it by 12 to annualize. So right now, they're seeing in a year over $500,000. I'm sorry, over $500,000,000 in value paid out to individuals who are staking Ethereum on this particular platform. That's what I want to say. They have a current treasury, which means this platform is holding value somewhere. They currently have a treasury of $67.95 million, and they have raised a total of $167 million. So you can see the market cap, the LDO price, LDO volume, the LDO liquidity, the FDV, which is the fully diluted value, the fees, the revenue, the median APY, USD inflows, the governance, the treasury. All of these things have value, and which gives value to this particular platform. Now, let's go ahead and take a look at the website. Let's break the website down. All right. We got the website pulled up. So this is Lido Finance at lido.fi, which stands for finance in the shorthand. Let's go ahead and decline. I don't want any cookies collected. Not right now. So this is liquidity for stake tokens. Now you might be asking yourself, what does that mean? Liquidity for stake tokens. So the way this platform works is that they're going to give you a staked token value for staking or providing your Ethereum to this platform. Staking simply means that you're going to deposit your assets onto this platform and you're going to receive interest on those assets. Hopefully that makes sense for you guys. So the total rewards paid so far from this platform have totaled almost $1 billion. They totaled $726,014,476. The current total staked right now is at $14.6 billion. So check this out. You can stake 3 assets. You can deposit 3 assets on this platform. You can deposit Ethereum, you can deposit Polygon, and you can deposit Solana. You can deposit Ethereum and receive 3.6%. You can deposit Polygon and receive 4.2%, or you can deposit Solana and receive 6.8%. Now, I want you to pay attention to what they're talking about when they say that they're giving you these rewards and how you can use those rewards to receive more rewards. So check this out. Ethereum, stake any amount of ETH, get daily staking rewards, and use your ST ETH across the DeFi ecosystem in layer 2. What that means is they're going to give you staked Ethereum. When you stake your Ethereum or deposit your Ethereum, they're going to give you ST or staked Ethereum that you can use on DeFi ecosystems throughout this entire decentralized space. So if they're going to give you ST ETH is the exact same equivalent as regular Ethereum. So if they're giving you ST ETH, it's the exact same value as regular Ethereum. So what you can do is you can deposit staked Ethereum, or you can deposit Ethereum on this platform. They're going to give you staked Ethereum, and then you can come over here to Instadap and you can deposit that staked Ethereum. See how much we're getting for ST ETH right now. Let's take a look. We getting anything for ST ETH? Our ETH, you're getting 0.12%. Wrapped staked Ethereum, you're not getting anything as far as interest goes, but you are getting 4.07% in different interest on Instadap. So you can get 4.07% for that staked Ethereum, and then you'll be able to borrow against the staked Ethereum. So let me run that back one more time because you might have missed that. You can deposit Ethereum. They're going to give you staked Ethereum in the exact same value. Exact same value. You can take that staked Ethereum to Instadap and you can deposit it for an additional 4.07% interest in staked Ethereum and have the ability to borrow from that staked Ethereum. That's powerful. That's very powerful. So essentially, you're starting off with an asset. You're starting off with an asset and then taking that asset, depositing the asset, and then receiving interest on that asset, and then being able to receive double the interest again while being able to borrow from that staked Ethereum that you received from your original deposit. That was a mouthful. I hope you guys caught that. I really hope you did. So we can do that with any asset on this platform. We can do it with Polygon. They're going to give us 4.2%. And we can do it with Solana, and they're going to give us 6.8%. And they're going to give us ST Sol, which is Stake Solana. We're going to be going over that in a couple of weeks. And we're going to be going over Polygon. But I want to keep the focus on Ethereum. This right here is a very powerful system. Very powerful. And you definitely want to utilize this in all parts. So let's go back to DeFi Llama. That was just one protocol that we took a look at. We didn't do a complete deep dive because I don't want to overwhelm you guys. This is just like the introduction to blockchain banking. So I want to try to keep this as simple as possible, but we can definitely do some deep dives and run through a few strategies as far as being able to implement this system. All right, so let's take a look at another one. Let's go take a look at another platform. Let's take a look at, we already know what Aave is about. In the past month, Binance staked Ethereum has seen an increase, wow, of 239%. Let's take a look at that. Their current total value locked is 1.25, almost $1.26 billion. A token created by depositing Binance Ethereum into the Binance Ethereum wrapper. Each wrapped Binance Ethereum represents one Binance Ethereum equal 1-to-1 staked Ethereum plus all of its accrued ETH 2.0 staking rewards. Interesting. Let's take a look at this. Nice. Wrapped Beacon, Ethereum, liquid staking, passive earning with both staking rewards and additional DeFi gain. Wrapped Beacon Ethereum is a wrapped version of BETH. Wrapped BETH is a reward bearing in nature. It accumulates ETH 2.0 staking rewards not by growing in number, but by growing in value in relation to BETH. Unlike BETH, Unlike BETH, the value of wrapped BETH will increase despite not being held in Binance Spot Wallet. That means wrapped BETH provides you with double yield potential by holding it to earn staking rewards and moving it on chain and exploring existing DeFi and other DApp opportunities. Users can wrap their BETH to receive wrapped BETH on this page. Find below for the historical conversion rate of one wrapped BETH in BETH. Interesting. Very interesting. I'm interested in this platform. Very interesting. I wonder, because this is in Binance, I wonder if this is definitely a DeFi platform, because if it's asking me to log in or if it's asking me to register, let me see what the register says. Anything that's Binance related, though, unless they're going to actually let us register, this is not decentralized. Anytime you have to register or give your email to utilize the platform, it's not decentralized. This is definitely centralized. But it's a very good idea. Very good idea. I don't want to focus on this, but it's a very good idea. I only want to focus on the decentralized aspect of what we're doing. So I'm going to get rid of this, but definitely take a look at it. Definitely take a look at it, because there has been some very large inflows into that protocol. So it's not a bad look. I just want to keep it decentralized. So if I can keep the asset in my own wallet as opposed to creating an account on a centralized platform and then being held on their platform, I don't want to do that. I want to hold the asset in my own wallet. All right, so let's take a look, see who else has some value. And this is what you do. You just go through the platforms, look for the ones with the value, you click on them, and you find out about them. Ondo Finance. Ondo Finance, this share class provides liquid exposure to an ETF of short-term U.S. Treasuries. Really? Oh, we just stumbled upon U.S. Treasuries. Nice. Real world asset. Let's take a look at the website. Introducing USDY, Ondo US dollar yield. US dollar yield is a tokenized note secured by short-term U.S. Treasuries and bank demand deposits, bringing institutional grade low risk yield to the global on-chain economy. Only for non-U.S. persons. I'm not going to dive into that, but as long as you're not a non-U.S. person, or as long as you are not a U.S. person, then you should be good. You should be utilizing this platform. So let's take a look. So institutional grade finance now on chain. Ondo is building the next generation of financial infrastructure to improve market efficiency, transparency, and accessibility. So what they are doing on this particular platform is they are actually allowing you to generate interest using these pretty much money markets. So they have compound, they have OMF, which is US money markets. They have the US Treasuries that's yielding 5.1%, and the high yield income, which is yielding 7.33%. Let's take a look at that. Let's see what's on the high yield income. The Ondo High Yield Corporate Bond Fund. This share class seeks to track the investment result of an index composed of US dollar denominated high yield corporate bonds. One of the most popular high yield bond ETFs, generating high income for investors through exposure to a broad range of US high yield corporate bonds. The significant majority of this portfolio will be in the iBox High Yield Corporate Bond ETF HYG. There's also a small portion of USDC and USD for liquidity purposes. Distributions are automatically reinvested into the underlying fund assets to compound your investment. Nice. I want to take a look at that. They said HYG. Let's take a look at that. Let's go to the chart. I want to see what that ETF is performing at. HYG. Where you at? HYG. Right there. We're on a daily. It's not looking good for the thing. Ew. Mm-mm. No. Oh, oh no. No, unless I was shorting this, I would not be interested in this. Let me see. Are they using this to short? The ETF product page, fact sheet, yield, total assets is $15 billion worth of assets in that particular asset. Liquidity, 2.5 billion of daily trading volume. Weighted average maturity is 4.79 years, or almost 5 years. Credit quality, S&P triple B is 0.84%. This is made up of different tranches. So it's made up of triple Bs, double Bs, Bs, triple Cs, and double Cs. There is a majority weight of double B credit assets in this platform. This is interesting. The minimum amount to invest into this platform is 100,000 USDC. So you can't even purchase this asset unless you have at least 100,000 USDC. And this is decentralized. You do not need to sign up for this. You can just connect your wallet and you should be able to get access to this platform. But if this was me, I would need to see if I can short this. If I could short this, this would be something that would be very interesting to me. Very interesting. If I can short that ETF. Let me see if they have anything that is shorting an ETF. Because if they don't, it might be beneficial to try to build something out. That would be very interesting. But these are just made up of tranches, and those tranches are made up of different credit ratings of different treasuries, bonds, money markets, and compound strategies. And it appears that they are also on Polygon. So we're going to be covering Polygon in a couple of weeks, but I definitely want to keep it on Ethereum. So, all right, let's go back. I'm going to close this website. That was some pretty good research right there. Then let's go back. All right, let's take a look. Who else has some large inflows? Ondo's looking pretty good. Pendle. Pendle is looking pretty good. And Silo Finance is looking pretty good. Let's take a look at Pendle. Pendle has $161 million in total value locked. Pendle Finance is a protocol that enables the trading of tokenized future yield on an AMM system. It's automated money maker system. Let's take a look at that. I want the website. Thank you. All right, let's take a look. See what Pendle Finance has to offer. Liberating yield. You can get a fixed yield of staked Ethereum at 4.01%. You can get DAI fixed yield at 3.95%. You can get SFRX ETH. I wonder what that SFRX is. That would be something to find out. Let's go to education. There's nothing wrong with clicking on education to find out what we're dealing with. Nice. So, there's a collection of research you need to understand Pendle inside out. They have the docs where you can learn more about the protocol mechanics. They have the yield trading handbook and learn in app, a full guide for your yield trading and a deep dive into its intricacies. Which one do I want to learn first? Let's go check out the docs. All right. Overview, introduction, Pendle, yield tokenization, Pendle AMM. Let's go ahead and get started with an introduction. Okay. How much will you earn from lending 1,000 USDC on Aave? 1%, 3%, 5%? Truth is, you can't say for sure. Yield fluctuates just like token prices. It tends to go up in bull markets and go down in bear markets, and there are further micro factors that cause, hold on, that cause fluctuations within those general market trends. With Pendle, you can always maximize your yield, increase your yield exposure in bull markets, and hedge against yield downturns in bear markets. What does Pendle do? We give users the reins to their yield. Pendle is a permissionless yield trading protocol where users can execute various yield management strategies. There are three main parts to fully understand Pendle. Number one, first, Pendle wrap yield-bearing tokens into SY standard yield tokens, which is a wrapped version of the underlying yield-bearing token that is compatible with the Pendle AMM. Interesting. So the standardized yield tokens, it's going to be the wrap version of the underlying bearing token that's compatible with Pendle's system. So the same thing that we just took a look at as far as the ST Ethereum goes, it's operating in the exact same way. So if you deposit assets onto this platform, they're going to give you a wrap version of that asset to use somewhere else on someone else's decentralized platform. This is dope. I'm liking this already. I'm liking this a lot. SY is then split into its principal and yield components. Principal token or PT and yield token YT, respectively. This process is termed as yield tokenization, where the yield is tokenized into a separate token. The yield is tokenized into a separate token. That's very interesting. So they're taking the yield that you're receiving, tokenizing the yield that you're receiving, and then issuing you a separate token that is still the equivalent of the original token of the platform. That makes a lot of sense. I like this. I like this a lot. Pendle AMM. Both PT and YT can be traded via Pendle's AMM, even though there is the core engine of Pendle. Understanding of the AMM is not required to trade PT and YT. Pendle as a yield derivative protocol. We are bringing the TradeFi interest derivative market worth over 400 trillion in notional value into DeFi, making it accessible to all. I need you to read that last line right there. The TradeFi interest derivative market worth over $400 trillion in notional value, bringing that value, 400 trillion, into decentralized finance. That is huge. I'm going to leave it right here. I'm going to leave it right here. I feel like this has been enough for people to digest and people to do some research on and understand what some of these terms are. What do some of these terms mean when it comes to finances, and really getting a strong understanding on what it means to really grasp decentralized finance, and understanding that you can create any type of mechanism on decentralized platforms. So, with that being said, I'm going to go ahead and end it right here. I appreciate you guys for tuning in. And next week, we'll be covering the Polygon platform. Peace, family. Thank you.